What year are we in relative to the dot-com bubble in terms of what might be an AI bubble?
Yeah, I don't know. In some ways, what we see right now is that there are similarities. Asset prices are high. In aggregate, maybe as high as they were then, or not quite, but we're getting there. There's big investments being made by companies in AI and data centers and all that stuff. There's a ton of excitement about AI. Companies mentioning AI or adding AI to their names are boosting their valuations, which is another thing that we saw in the dot-com era. So that's all similar, but I think there are other important ways that it's a little bit different. Many of the publicly listed companies that are getting the AI-related boost in valuations are actually profitable businesses that are making investments in AI. I think that's different from what we saw in 2000, where there were a ton of IPOs, a ton of companies making no money, companies raising a ton of money just on an idea. So I think that's a difference. So I wouldn't predict, that we're in 1999 and things are going to crash. I don't know. There's a lot of different ways that high valuations can be resolved. There can be a crash like we saw in the dot-com era. There can be a prolonged period of low returns where valuations eventually normalize, or there can be big earnings surprises where earnings end up, hey, maybe these investments work out. Earnings are way higher than anybody expected, and valuations get resolved that way. I mean, we could have been talking about high valuations 5 years ago, and valuations were high. And what happened? Well, returns were incredible because earnings just kept going up and up more than the market had expected.